Welcome back. You're watching Buy Now, Sell Now on ET Now. You just heard the Prime Minister speak about ease of doing business and also about the PLI schemes that the government has running. Let's quickly take a look at how the markets are faring, though. A little bit of that weakness that we saw in the US markets has made its way into the Indian markets. Of course, the headline there was that Jerome Powell, the Fed chair, was supposed to talk down the yields in the US markets. He failed to do that, and that has spooked equity investors yet again. The headline is that the Nifty 50 is holding on to that 15,000 mark in trade as of now. But over the last hour or so, you've seen a bit of a shift in the market breadth. About an hour back, it was more or less even Stevens between the winners and the losers. But as of now, you actually see that the market breadth is tilted in favor of the losers. And the reason for that is that we're seeing increased selling in the broader markets. They were actually holding on, especially the small cap index was actually in the green. But right now, it's trading with cuts of as much as 0.5%. On the sectors, you see pretty much across the board, you see weakness apart from the Nifty Media, which in fact has also lost a bit of ground over the past hour or so. The biggest losers are the metal index, which remember has done pretty well for itself in the recent past, as well as the Nifty Bank. But volatility seems to be the name of the game, Karnya, going into the end of the week. We've seen the VIX also spike by about 6%.
Absolutely, and even the stocks that we've picked out for our Buy Now, Sell Now stock cloud today are telling a similar story. Let's pull up the stock cloud then to see the list of stocks to keep on your watch list, starting with the heavyweight Wipro. On the back of that $1.5 billion deal, the stock continues to remain in the limelight. You also have Max Healthcare. The board has approved the opening up of a QIP. The floor price is set at 190.4 rupees a piece. There's also ISJEC Heavy Engineering. They've received an order for waste heat recovery boilers from Shree Cement, followed by some fundraise news that's brewing for the likes of Indian Bank as well as Mindspace Rights. Both of them have their board meets on 9th of March to understand and approve what the form of fundraising activity will be going forward. Quick Heal Technologies, they also have their board meet on 10th of the March to consider and approve proposal for buybacks. So another important development brewing there. There's Unichem Labs as well. They've received an ANDA approval for guanfacine tablets, which are essentially used for managing hypertension. There's also some brokerage reactions and brokerage updates coming in for the Emphasis as well as Bank of Baroda. Morgan Stanley has downgraded Emphasis to equal weight. Bank of Baroda, in the meanwhile, was upgraded this morning by global investment brokerage CLSA. And finally, you also have Laurus Labs that's made it to our list today. Founder promoter Dr. Chava has sold about 52 lakh shares at a price point of close to 369 rupees a piece. Nagrani Chava, who's also one of the promoters, has sold close to 18 lakh shares. So there you have it, all the stocks to watch out for as part of our Buy Now, Sell Now cloud.
All right, we're joined as always by Kunal Bothra, and today we also have Mr. A.K. Prabhakar, who is Head of Research at IDBI Capital Market Services. I want to come to you first, Kunal, though. How are you seeing the markets? We've seen a little bit of selling pressure intensify over the last hour or so. And what are your high risk and low risk ideas today?
So yes, selling pressure is intensified. Alex, good morning, first of all. But I believe that there is a bounce in many of the Asian markets as well. They've recovered quite well from their intraday lows, and I think in that aspect there could be a possibility that we may go through a late or a second half surge or a rally or a recovery in our markets as well. On that backdrop, I would suggest a couple of buy calls. The first one which I'm suggesting is about Eicher Motors. I think the auto stocks are making a strong comeback for themselves. Yes, the two-wheelers specifically like Bajaj Auto and Hero MotoCorp are looking quite strong. But I think even Eicher Motors at current levels looks very attractive for a decent enough bounce from current levels. So buy with a target of 2,700. Stop loss could be kept at 2,550 mark. And the second is a buy on the mid-cap stock. It's about Action Construction or ACE. As the NSE code goes by. The stock is coming out of almost a 1 month consolidation, coming back after a zone where the stock had been consolidated in the Bollinger Bands, had gone into an extremely narrow band for action construction. So, which is why I would sense that this could be a big breakout for the stock, and it could come back into that league, where many of these mid-cap stocks were just, flying up high and making new highs for themselves. So I think action construction is a stock to watch out for. Targets of 180, which should take the stock back towards its, fresh highs on the short-term charts as well, and stop loss could be kept at 155.
All right, Kunal, thanks for that. AK Prabhakar is with us as well to talk fundamentals. Prabhakar, hi, morning. What are the stocks on your list today?
Good morning. Johnson Control is one stock which I like. Anyway, government is keen on the PLI, which Johnson Control also will benefit, even Crompton. And important thing is all Met Department is warning that the summers can be hot. So I think anything connected with air condition is likely to do very good for the next 2-3 months. So that is on the shorter term. In a longer term, I like Nestle. Nestle is expanding its capacity in India. They gave that last calendar year result update where they are very positive and they want to reach to more rural based Indians. So I think that is a stock which is looking attractive for a long-term investor, and it is a very safe bet at 16,800 levels.
All right, let's head into our queries then. The first query, in fact, coming in from Sankara Subramaniam from Chennai, and he's asking about City Union Bank. Kunal, on the charts, how does it look? Would you say that it's a good stock to get into, or would you prefer another name for the financial space, despite the fact, of course, that we're seeing a little bit of weakness in that sector?
I think, Alex, historically, the stock has, very strong history. If you look at the charts from a longer term view, there was this period from 2012 to 2019 or 2020 start when the stock was into a classical uptrend for itself. So, it was one of the few, private sector stocks which used to just about consistently make a new high for itself, almost, on the longer term charts. But then came, the COVID correction, and then you saw the stocks, grinding lower. This stock is now making a comeback for itself. So it has a very strong, historical, pedigree for itself. The trends have been quite stable historically. Yes, the last last 1 year has been a bit topsy-turvy for the stock, but I think it's trying to settle back into a range. So I think that's the most important point for a stock like City Union Bank. I think if I'm not wrong, it's also a stock which is now coming to the F&O list as well. So that adds to more trader participation and volume participation into this stock as well. I think going forward, I believe that the prospects for City Union Bank should be on the positive side. If you're expecting banking index and the bank Nifty to continue to move up higher on a medium term to longer term basis, then I believe City Union Bank could be a stock which can come back to its prime yet again and repeat the same behavior of making a staggered and a very steady kind of a long term uptrend for itself. So I would suggest a hold if you've already bought in and got into the stock earlier.
All right, the technical view then is a hold on Kunal's front, but let's go across to Mr. Prabhakar, apologies for that, for a fundamental view. Mr. Prabhakar, in the past you've had a lot of people that say that you should pick the winners in the banking space, particularly the larger banks are more likely to keep hold of the market share that they have. What's your view on City Union Bank?
See, it is traditionally a south-based bank with almost 700 branches, and their deposit base is only 43,000 crores and an advance of 36,000 crores. So, when you buy a small bank, the growth is something we don't buy. So, that is why everybody wants to be in the larger scheme of things. That is why HDFC Bank or ICICI banks, they perform better because they are taking more market share from the smaller bank. The cake is big, but the bigger ones are growing better. So that is where the smaller banks are losing out. But it is not a bad bank. It is a 100-year-old bank. So somebody who is looking for a longer-term tenure, it is okay. But if you want high returns, I don't think City Union Bank will deliver that kind of return. I like ICICI Bank, HDFC, even State Bank of India at current level. State Bank almost now controls 20% of the deposits of total Indian banking system. So I think, and after a very long time, the stock has performed. But, at this point of time, ICICI Bank would be a preferred bet. If you want to hold on to City Union Bank, you can hold on, but the pain point will be slightly extended.
Okay, we have time for one more quick query, so let's address that now. Sylvester D'Souza writes to us, he's bought 110 shares of SIS at a price point of 487. His time horizon is 5 years, and he's already been holding on to it for the last 1.5 years out of those 5 years time horizon. He wants to know whether he should stay put or exit. Kunal, Feb has been a good month for the stock. From 390 odd levels, I think it has slowly been able to catch up, and it's now at 425, still way below the buying price of Mr. D'Souza. What would be your advice at this juncture?
Well, I think technically 450 is the level of breakout for SIS. So yes, the last couple of months have been quite fruitful. It's done pretty well for itself. I think the second half of 2020, where it recovered from those 350, 360 levels. So I think from there on, it's into a recovery mode. But I think the recovery could probably improve and I think get better once the stock scales past about that 450 mark. And I'm talking of it as a monthly closing. So yes, the stock is at 425 levels. There could be a chance that it may go through a touch and go moment yet again towards that 450 mark. But I think if it completes to break past about 450 on a closing basis, monthly closing basis, then you could look at a very strong recovery for the stock. Even a possibility that the stock post that 450 mark could head towards 550, 600 levels. So I think you can continue to hold on, and I would expect that if the mid-cap stock recovers or the mid-cap index recovers yet again, then I believe SIS could be a stock which can break past about that 450 mark, which could potentially lead to at least a 20 to 25% upside from those levels.
Prabhakar, what is your view on the fundamentals for SIS here? What would be your advice, given that he is still incurring a loss? He's been holding on to it for 1.5 years already.
See, it is a new kind of business, a different kind of business. They are into security and intelligence services where patrolling is done, your cash ATM replenishment is done. There are many activities which they do, and they are growing at 18 to 19% CAGR in the last 5 years. So the business is also catching up, and they are net cash company. They have a debt, they have cash. So they are net cash company in that criteria. So it is a wonderful business, but we need some more time for the business to succeed. So as the economy also grows, this is a kind of business which will grow faster than the economy. So from my side, I think it is a whole. You have 3.5 years. Maybe if you can extend 1 or 2 years more, this stock will be a doubler also from current levels.
All right, Mr. Prabhakar, on that note, thank you so much for taking the time. Kunal, you as well. Thank you so much for taking the time and joining us today. It's been a pleasure speaking to you. We are going to be speaking about today's debutant on the stock market. Heranba is listed on the stock exchange with quite the great gains. In fact, it listed at a 44% premium. We've got the management joining us right now, Mr. Raghuram Shetty, who is the managing director of the company. Thank you so much, sir, for joining us, and also congratulations on the listing. The first question, of course, and it's a pretty obvious question: how do you intend to utilize the fresh issue proceeds of the IPO, and what is the post OFS shareholding pattern for the company? Okay, it seems like we are having a bit of an issue with that link, but let's check that out. And in the meanwhile, we'll slip into a short break. We'll be back on the other side. Welcome back. You're watching Buy Now, Sell Now on ET Now. Now, the debutant on the stock market today is Heranba Industries, and it's had quite the listing. It's gained about 44% on listing, and we're joined, in fact, by the management. The managing director of the company, Raghuram Shetty, is joining us. Thank you so much, Mr. Shetty, for taking the time, and congratulations on the listing. I do want to ask you the most basic question first. What is the fresh issue amount, or the amount that you raised with the fresh issue, going to be used for, and what is the shareholding pattern going to look like post the OFS?
Yeah, thank you very much. Thank you very much for having me in this ET Now. This fresh issue will be around 60 crores, which will be used for our working capital, and the balance will be OFS. What was the second question, sir?
Shareholding pattern going to look like, sir, after the OFS?
Hello? Yeah, the shareholding pattern will be around 75% and 25%. Precisely 75.2, 74.8 and 25.2.
All right, let's talk a little bit more about the business then. You're in what some people might call a niche segment, and you cater essentially to specialty chemical players. How do you see the business growing from this point? What kind of guidance can you give us at this point? And also, is it a challenge to be operating in a space where there is intense competition from both domestic and Chinese players?
Yeah, we are into pyrethroids, which is a very safe molecule, and we are growing approximately, the pyrethroid is growing approximately around 11% and 6 to 7%, and Heranba is growing approximately around 10 to 12% year on year. And this is a safe molecule, and it is used not only for crop protection, it is used for public health also. If you talk about the Chinese competition, we are backward integrated, and in fact we are exporting almost 15 to 18% of our total sales to China. So it is comfortable. We are comfortable, and the year-on-year growth is also we are growing steadily in all the directions.
Okay, that's heartening to know, Mr. Shetty. The main global demand for pyrethroids comes from China. Now, what we understand is that because of the shutdown of chemical plants in China, pyrethroids are expected to be exported from India. So could you shed some light on that, and how much of an opportunity is this for players like yourself, and how much volume growth do you foresee on back of that?
Is manufactured in India. China is not strong for various reasons. So the key raw materials, intermediates, also manufactured in China, in India. That is why India is all along for the last several years, India was stronger, and with the latest trend, it is going to be much India will be stronger, because it is a backward integrated. Heranba itself is the two major raw materials, intermediates, for production of pyrethroids, also manufactured in India, as well as it is produced by us. Product called cypermetric acid chloride, which is used for many of the pyrethroids, as well as monopenoxybenzaldehyde, again it is produced by us. Since all these products are produced in India, and the raw materials also available in India, in and around Gujarat, so India is stronger, and it is going to be stronger in the coming year.
Okay, all right. And what is the volume growth that you foresee now that the opportunity is slightly bigger than before, given what's happening in China?
See, China is one of our markets. For the last 2-3 years, if you see, we are growing at a pace of approximately 18 to 20%. Now for the last 2-3 years, and we will continue to do so in the coming years also. We are entering not only in China, we are entering into the European market and US markets. Many registrations are lined up in these territory continents. So India will be entering into those niche market, and the profit margin will be better in these segments. Approximately we are exporting to more than 60 countries, and these Europe and US will be added in the coming years, wherein the margin will be better for Heranba.
Sir, you spoke about margins, and I'm going to take that opportunity to kind of get a sense for the coming financial year. How do you see that panning out? Because you say that these new countries are going to be added, and what kind of products do you have in your pipeline? And finally, also, can you give us a sense of what percentage of spends, or rather of revenue, is R&D spend going to be?
See, we are growing. We are not only into pyrethroids. We are into. See, initially we entered into pyrethroids. Later on, we added other products other than pyrethroids, like herbicides and fungicides also. That such products will be added in our basket. And if you see the margin wise, if you see, it is some newer molecules, now off patented products we are working. We have got 3 R&D facility in each unit. And we are, in terms of percentage, it is small, but it is a one-time expense. Approximately 2% we are spending. In the coming years, we will enhance it for our R&D facilities.
So you did mention your margin projection for the new financial year. If you can close on that.
See, approximately it is EBITDA was around 50. It is for the last 2-3 years. If you see, it ranges up to 13 to 15%, and the PAT approximately it has grown from 7 to 10%. We will continue to do so in the coming. We will maintain those margins in the coming years also.
Absolute pleasure speaking to you, Mr. Shetty. Thank you so much for joining us on this program. And on that note, we have to slip into a short break. More on the other side.